Hello to all traders and welcome back to another market review brought to you by Orbex. So the massive sell-off in yesterday's trading on US indices and most of global indices as well has seemed to have found a little bit of support. The Dow dropping over 800 points on the news that Donald Trump will start pushing tariffs to 15%, even though that the US Supreme Court did tackle him and say that he can't go any higher than what he is doing at the moment. But that didn't stop the sell-off. So the trade war is a history repeating itself. We had this roughly around April of last year, and now we're having it again in 2026. The Dow dropping, like I said, quite significantly, but finding a little bit of support roughly around 48,900, 48,800, roughly around that area. Now, if price action can bounce back and complete its turnaround, then obviously we'll be looking at 50,000 again for the next psychological limit. But until that does happen, we are very, very subdued and really started to see now the implications of what global tariffs do mean for big AI and tech companies, which have seen a bit of a sell-off in yesterday's trading and are expected to open with gaps in today's trading when the American market does open. So what does this mean overall? Well, like I said, it's a little bit like history repeating itself. If we look at the, actually, let's go back on the Dow for last April, actually, and we can see just how what a mighty sell-off we had last time around. So this is when the tariffs, roughly at the beginning of March and April, were implemented and starting the massive correction in price action. So the Dow fell roughly from about the mid 42,000 area and then trading towards 37,000. So what a massive correction that was in the market. And then things started to get back on track as the trade war kind of de-escalated. Things kind of got back on track and price action was a little bit more, well, better, let's say. So, but since then, as you can see here, since the Dow topped this record, roughly about 50,500, we are seeing this massive bearish candle on the daily chart intraday, not really looking too much easier neither. So is this just a bit of a warning for from Donald Trump? You know, European stocks are trading lower as well, or is it something he's going to implement? Well, we'll have to wait and see. But the S&P shows a bit of a similar story here after failing to really recapture the heights of just above 7,000 on a record there. That price action is very, very choppy now and moving lower and lower. The only saving grace is we didn't really fall through this support here of roughly 67 to 6,800, which is the firm support at the moment, which it's going to. So will Donald Trump keep going with his tax threats? Will global risks keep on pushing AI and tech stocks lower? We'll wait and see. But as always, we'll bring you all the latest in fundamentals and technicals as they come. So stick with us, stay ahead, trade responsibly, and we'll speak again next time. Bye for now.